Holy hell, man. This is the third time I'm recording this. My audio's been buggy, but hopefully it came out well on this third attempt. Bro, I got the hat trick. Let's go. Alright, so I'm trading CRV. This is going to be a swing trade, and I've identified this market maker model. So you can see very clearly there was a high right here that got taken out with wicks, and you basically had three taps. So what you had was order pairing above that high, meaning when those stops got purged, shorts were getting filled in that range. And then you could see below this low, we broke structure, first level of distribution, again breaking below this structure with energy, creating another distribution zone. And what I'm expecting is, now that we have these 4-hour intraday lows, you have 1, 2, 3 equal lows in the range. There's a lot of liquidity pooled in this range right above structures. So for me, this becomes an A+ setup. And the reason I like it is you have kind of like a catcher's net with the structure below these three lows. So if you go back historically, you could look at the reactivity there. So you had basically like a double bottom, and then it had a nice move. It even checked back here, the top of the structure, and then it just went absolutely parabolic, right? Moving forward, you could see when it came back, it retested it here and it was very reactive. But then the bounces got, not quite as deep as it was previously. Then you had this bouncing ball effect where it was 1, 2, 3, 4, and then the bounces got really tiny here. That's when you can tell structure is getting porous and it's probably going to break. And then you had this break of structure, inversion. And if you look at my YouTube, there's a previous video on the long about this 3 tap setup, 1, 2, 3, and then you basically retested this order block and then took off again, parabolic. So that was a pretty good long. And now you're in a situation where it's retracing 88% of the move. So what I'm looking at is not only a market maker model, but you could even frame the trade from the perspective of harmonic trader. So here you're anchoring to the low, the high, the mid wave over here. So like the corrective retracement of that first move, lower high, and then you're projecting to the 886. Basically like right there. So that kind of lines up with structure below these equal lows, which is why the move down would be like pretty good confluence to reverse over there. The other thing I'm looking at in the range, if you go on the weekly, you could see there was a very clear supply line, 1, 2, 3 rejections before a clean break and that amazing move all the way up to there, 130. So what this could end up being is like a Livermore pivot, or bump and run they call it, where you have a breakout retest of supply, and what you're looking for is this supply to be turned into demand, and then you would expect it to expand out of the range if it does end up holding. So you basically have 3 factors in the zone as confluence for potential long if we get it between 30 and 40 cents. And the idea is, if this is a harmonic, I find when it hits the 886, it doesn't immediately just V-shape out of the range. Because this pattern took a long time to develop, what they'll normally do is they'll take the equal lows, make a short-term low. So something like this, they'll take it, they'll come back, and then do a long-term low, and then a short-term low before actually going. So you get a short-term low, long-term low, short-term low again at structure, and then that confirms for everyone who's taking the trade that this is support now. So I would look for that. You have time to get in, and the way I would do it, just because it always, for CRV, for whatever reason, whoever's accumulating a position, they usually take time. They don't just rip it out of the zone. But I would take 25% on the first drop below the equal lows. Then if it takes this low out again with a long-term low, I would add 25, so now you're 50% in. And then if it forms a third low, I would put another 25, now you're 75% in. As it goes green, you could just start adding whatever the rest of your allocation would be. But yeah, that's the setup on CRV. It looks pretty clean to me in terms of being a market maker model, targeting a very clear target down here. And the 886 for the harmonic would be deep value. So this is where you'd be looking for longs, not up here with the other dummies. But that's CRV. If you have any questions, I'm always around. Cheers, guys.